Hey folks, welcome to Weekend Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This week, the update is for December 15th through Friday, December 19th. As we get into things here, folks, I want to just discuss a little bit about the weekly update, and I want to just talk a little bit about the reasons for putting it out. In this market, we have to focus in on the technicals. I mean, that's really what's going to tell us where the market's going. But it's good to be aware of the peripherals around, all the different things that we understand about the markets in the coming days. And I want to take a little bit of time on this weekend update to go into the odds and ends that will be of interest to all of those out there that are interested in the economy, what's going on in the economy, what economic news, what earnings news, what Fed-related, what government-related news will be out this week to keep in mind. And I really want to focus on that, as well as go over the key technicals on the charts leading into next week and kind of discuss a little bit about that. So that's what we're going to do today first, folks. And number one, I want to start about really what's the economic side of things and what do we have to look forward to this week. Number one, the biggest thing out there is going to be the Federal Reserve. Number one, the auto bailout kind of continuing, and whether or not do we get some money from the TARP. Does Bush and Paulson give money to the automakers from the TARP, money that was set aside for the financials? Does that happen? Does the Fed cut interest rates to an all-time low? Do they cut it 50 basis points? Or right now, speculation is that they'll move it from 1% down to 0.5%, cutting it 50 basis points. So that's the idea, really, what you want to focus in. Now, the Fed should be out on Tuesday with their interest rate decision. So that'll be the main focus of the first part of the week. There are some key earnings as well that we have to discuss in this week, and it's really a wild week for economic news, earnings, and the Fed because of that. And you also have to add in that whole aspect of the government and how the bailout for the automakers are going to progress. Last week, we know the Senate rejected. The markets gapped lower on Friday, but only really gapped lower ultimately to rally back and pose a very strong day. Even though it wasn't a big up day, the fact that you were able to gap down so much and rally back is a strong situation. So I'm going to bring up the chart here of the markets and over the last week or so, and really over the past month or two, and you can see this is the daily chart, and I want to just go over the little odds and ends here. So we have the Fed, that's on Tuesday 2:15, watch for the Federal Reserve to release their interest rate decision. Now, that may play a little portion in it's more about what they're going to say. I think the market's pretty much factored in that they're going to cut by 50 basis points. If they do anything more or less, you may see a near-term reaction in the markets, but ultimately 50 basis points has been factored in. That has to be understood in the market. So where we are now, you have to figure that 50 basis points has been baked into the cake. The other thing you have to watch for, again, is that auto news. All right, does Bush come out and say we're going to use some of this TARP money to bail out these financial automakers and just kind of use that money baked for the financials to really get these automakers out of play? And that's going to be the next key to look for, because the markets will react positively to that, at least in the near term. You'll see a day spike or half a day spike or a gap up as a result if that does get announced. So there's a lot of news this week that's going to be very influential on the whipsaw. And remember, folks, those of you that have been following our videos in the Research Center and know the key levels and the turn dates and pivot days, we do have pivot days coming up, so I do encourage you all to join the Research Center at InTheMoneyStocks.com as we give out all our key levels, all our key supports and resistances on gold, oil, the dollar, the markets, and we're going to call our pivot day this week as well as turn dates and so forth coming up. So you want to really be in tune with that. This video here is just more of a weekend update for the general audience, those that don't necessarily want the key stuff in there and just want to get a general sense of where the market's going. So having said that about the automakers, the Fed rate cut possibly here this week, we also want to talk a little bit about earnings and other market data. This week you'll see earnings from the likes of Goldman Sachs and Best Buy and Morgan Stanley. Now, you're also going to have some housing players like Hovnanian report, and that's also going to be key. So you can just see the massive amount of economic earnings, peripheral data coming out this week that couldn't fix the markets into a very volatile week. Now, the one thing I would like to say is that it's options expiration week. You guys know how we feel about options expiration. It's one of the wildest weeks, and you can see with this data that we're talking about, it's going to be unbelievably volatile. So again, look for Tuesday. Tuesday's really when things are going to get started. There's a little bit of economic news on Monday. Just looking through it, you have the New York Empire State Index Monday. net foreign purchases on Monday, capacity utilization also on Monday, and industrial production. Those numbers generally are not big in the market moving categories, so do not think that you're going to get a major reaction. You may get a minor spike here and there if they're really ugly or very positive, but ultimately they're not the biggest ones you're looking for. You're looking for Tuesday. Now this is when it gets very interesting. Tuesday we have building permits, core CPI and CPI. That should be an interesting number on the inflation side, although it's looking more and more like deflation could be the issue here. Housing starts on Tuesday as well, and again, the key one here, 2:15 p.m. Eastern Time, the FOMC policy statement. Again, expectations are a 50 basis point cut. Okay, now also, let's talk about Tuesday as well. Tuesday, companies reporting, Adobe, ADBE, Best Buy. Best Buy is going to be very, very interesting. Goldman Sachs is the leader, though, here. This is what you got to follow. Goldman Sachs is going to be everything. How much of a write-down do they take? What do they say? Are they almost near the end of these write-downs? Are they just beginning? The market's going to take a big, big key from this Goldman earnings report and what they say in the conference call for the overall market. Now, this is all coming out prior to the federal rate decision, and whether or not it plays a part in what the Fed does, we won't know until we get that data. But that's another thing to watch for Goldman Sachs and Best Buy. Best Buy will be key because we're going to get to sense about where Best Buy sees the coming quarters, how sales are going. Is the slowdown as bad as they've been saying? Is it going to be worse? Is it going to be better? So you can see, again, major economic news coming out. Now, I'm going to flip over to the daily charts. You can take a look at the daily here on the intraday SPY, and that's just giving you a sense of what we saw that gap down on Friday as I continue to dissect the economic news. The other thing you want to watch for on Tuesday after the bell is Hovnanian. They're a builder, a housing player, and that's going to give a good sense. Now, the whole idea here, folks, that I want to put forth is the markets will not bottom out fully, and we won't be through this recession until housing prices bottom fully. Now, in our opinions, that's going to be more than a year from now at least. All right, you're talking about possibly into 09, 010, 2010 before you really see the bottom put in. Now, in the near term, you're going to have bounces here and there. Just like a stock price, things will bounce and you'll get little bounces in the market. But ultimately, the markets we're going to be stuck in this recession. Now, that doesn't mean the market will be making new lows necessarily either, and that's why you really have to come to the research center to really get our hardcore data, which we give our subscribers in the research center, our full projections on everything, our proprietary calculations will really show you, and we'll be able to tell you much more directly in the research center, which again has about 4 or 5 services in it where we talk about lots of different stuff. But again, Tuesday's a huge day for this market. Huge day between the Fed, these earnings announcements, and the economic data coming out. That's also big. And remember, any day this week you could have Bush and Paulson coming out saying we're going to give the automakers, $14 billion like they were planning to pass through the Congress and Senate to the automakers from the TARP plan, which again is the financials. Okay, let's go on a little bit here and let's discuss a little more. A few other things you got to look for this week, guys. OPEC. OPEC is very big, all right? OPEC is estimating, people are estimating they'll be cutting by 1 million barrels a day at least. And they're trying to put a bottom in on oil. Now, generally, we all know, those of you that know about OPEC and supply and demand know that their production cuts don't mean a whole lot. The market doesn't really care about them, but it could cause a little near-term spike. Now, we saw a beautiful rally. We had been calling for a rally, or a bounce in oil, I should say. We did get that last week where we were down as low as about 39.40, and you got to bounce back to about 48. You might see a pullback here and there on oil, but ultimately I think the lows have been put in the near term over the next month or so in oil at that 39 level. It would be shocking to see that level go lower. Now, again, we'll retest that possibly next year. Again, that's for those of you that want to come to the research center and really get the hardcore technicals on the market. What are our key turn dates on oil, on gold, on the S&P, and where to be looking to go long and short. That's all in that research center at inthemoneystocks.com for only $49.95 a month. Now, let's talk a little bit more about what to expect next week. India plans a second stimulus plan. So India, again, you're seeing more of these countries out there putting more stimulus into the markets. FCC votes on cable TV and free internet. That's just something I wanted to throw in there because I found it interesting. And earnings. Let's talk a little bit about earnings and economic data coming up more this week. Let's take a look here. On Wednesday, you have crude inventory. So that's another player in that whole OPEC decision. Thursday, you have initial claims and leading indicators and Philly Fed and so forth. But again, just keep in mind here, folks, this is what it's going to come down to. You're really talking about the market, looking at the Fed this week, what's going to happen. Now, let's quickly go over the charts and go over what we see here. Number one, you have support, and you can see we called for this pullback right here. All right, Monday we had gone into pullback mode for a pullback from Tuesday through the middle week. You can see we got that beautifully. We got the gap down into support here, and the rally back on Friday. Next support line, and I'm just going to draw them in. I'm not going to tell you what they are. That's for those of you that want to join the research center to go and do. But here you can see our support lines in the market and resistance, obviously. All right, we'll draw those in. And some of these are major, some of these are minor. But again, if you want to know the exact numbers, you have to come join the research center. And there you go. These are support resistance lines. Some of them are Fibonacci based, some of them are proprietary, some of them are other support and resistance levels calculated out. But again, you want to come and figure them out, see which ones are major, which ones are minor. Where do we expect the market? Do we see the market falling back down here before we rally? Do we see this being the low and then a rally up? And again, that's all stuff you want to pay attention to in this research center. And again, you can always join the intraday stock chat. Come chat with us intraday live as we dissect and give play-by-play of the markets. All right, folks, again, look for an interesting week. This is going to be a fantastic week going forward. Lots of economic data, lots of earnings data on these financials. Watch Goldman Sachs again, watch the Fed, watch OPEC. Just keep an eye on the home builders as well. Have a wonderful week this week, guys. Good luck trading it, and stay safe. Take care.